September 4th, 2024. Today, when you're coming into the day after the prior day was a small pullback or trend day, as yesterday was, you have to keep in mind that there's a 75% chance of 2 hours of sideways to up trading starting by the end of the second hour. So, for at least the open of the day, you should have a relatively bullish bias. You can see we got a two-legged move down today for the bears. So, we had the 18 bar range to here, a failed breakout above the 18 bar range, and then a reversal down on 20. Really strong bar on 20. Bulls exit always in short bears, or always in bears get short. And that ended up leading to two large legs down, which ended around bar 69, around the low of the day. Obviously, the legs are complex. They're not, straight down, pull back, straight down. They move in deeper, in wedges, etc. But it does end up being one, and then clearly the deepest pullback, and then two. So bar one, a big bull bar closing basically on its high. It's good for the bulls, and coming into the day, you have to again remember 75% chance of 2 hours of sideways to up trading, but also 80% of days end up with a trading range open. So while it's okay to buy above one, I think it's fine to buy above one. You also have to keep in mind that you might end up getting a pullback. Some bulls might try to look to buy a 50% pullback of bar one instead of directly above it, but obviously those traders never got filled on bar two. So bar one, the bulls, a higher low double bottom with 76, something like that, and a bear trap. They're hoping 82, or not 82, but they're hoping the gap down. It ends up being a bear trap because you can think of the gap down as a big bear bar. So they're hoping the gap down is a bear trap, and now we have a bull bar closing on its high, a higher low double bottom, and the second leg down of the bull, or of the, for the bears. So one pullback two. They're hoping the second leg down is just a sell climax. When you get a double bottom, 30% of the time, the second leg is down is going to be a sell climax. Bar two is disappointing follow through. If you bought above one, hoping it was the low of the day, some traders are just looking for 15, 20 points, something like that. You can see the traders who bought above were able to make, well, not 30 points because it has to go 30.5 points, but they were just barely trapped out from making 30 points. So they were able to make 20 points, 25 points, but not 30. I thought today's range being 50, well, I suppose that's reasonably big. You have to remember that every day there's usually, so on 90% of days, there is a swing trade that is 40% the size of an average day's range. One qualified as a possible swing trade, and the traders who bought above it were able to make 20 points. And the daily range size was 50 points. So 40% of 50, it would be a 20 point swing. And that's what the Bulls got more than that, but they were able to make 20 points. So two, disappointing follow through if you bought above one. I think, the bars might make traders think we're always in short, but we have a good looking bull bar 78 and a good looking reversal on one. So it's possible that we are now always in long. Bar two, however, is a pullback, and so possibly a high one for the bulls. There's probably sellers above scaling it higher. You can see sellers stepped in around yesterday's close. It's possible we're forming a trading range somewhere in this area. Again, 80% of days are trading range opens, so you do have to keep that in mind when you're trading. So three, a huge tail on the top. You can see we sold off back to around the bar two high, where bears who sold were able to make a scalp, and a lot of them bought back shorts. Four, a inside bar. It's a high one for the bulls. You have to keep in mind we have not traded below another bar yet today. So we have a 4-bar micro channel for the bulls, which makes this a little bit stronger. However, there's a big tail on the top of it, and if you're buying here, you're buying right on the moving average. Do you really want to buy right on the moving average after a small pullback bear trend day? Probably not. It's also probably a trading range open, and this, with the bear bar on 2 and the huge tail on 3, this does not look like a bull trend from the open. So if it doesn't look like a bull trend from the open, you have to be thinking it might end up being a trading range open. And if it is a trading range open, do you really want to be buying up here when the close isn't quite what you want it to be and you're right on a relatively flat moving average? Probably not. So I think this has potential to be relatively disappointing. There is a tail on 4, a tail on 5, and a tail on 6. What you have to keep in mind is these tails represent pullbacks on lower time frames. So I'm going to group these bars together and just look at a 1-minute chart. It's a wedge, right? So 1, 2, 3, maybe spike, pullback, and then wedge channel 1, 2, 3. So these tails, again, you have to be thinking of them as pullbacks. They are pullbacks on a lower time frame. So the tails represent a wedge on a lower time frame. So it's really not as great to be buying up in this area as you might think. Yes, we're getting a bull bar 5 closing relatively near its high. However, it's unable to close above the breakout point, the bar 3 high. So you do not have a breakout on bar 5. And there's still a big tail on the bottom, which is concerning. And there's still a tail on the top, which is concerning. So this is really not as good as it could be. 6, another bull bar. However, 5, smaller body. So 4, big bull body, 5, smaller body, 6, even smaller body. So we have shrinking bodies and increasing tail sizes. That increases the chances that this is going to come to an end soon. It's showing that the bulls have slowing momentum. And that is not what you want at this stage and what you're hoping is a trend. So it might just be some sort of leg 1. I'm sure there's some leg 1, leg 2 in here. Something like that. Yeah, so the entirety of bar 1 was leg 1, and then you put that on the low of bar 2. That's about where the close of bar 6 is, because it's a trading range day. Leg 1, pullback, leg 2. Probably buyers somewhere below 6. However, on bar 7, sometimes you get a surprise. Yesterday on bar 7, we did get a bear surprise. And so you have to be thinking that we might end up getting a surprise on bar 7 today. You sometimes get them because of reports, but the market also gets into moods. And if the market has been giving you a lot of surprises on bar 7, you have to expect it to continue to do so. So there were buyers below 7 or below 6 during 7, and they obviously would have had to scale in a lot, stop at least below 1. But the problem with the stop below 1, if you buy below 6, is that the traders are probably going to be buying more below 1 if we do get below it. So a lot of traders buying below 6 are going to have an ultra wide stop, maybe a measured move of bars 1 through 6, betting against a bear trend day. So their thought process is, if the worst case scenario for them is that this is a trading range day. And if it is a trading range day, we're going to at least get back to the bar 6 low, possibly to the bar 6 close, maybe even above bar 6. So you can see buyers below 6 during 7 and a close around the midpoint of bar 7. So what do you do here? Well, it's the first time we've traded below a bull bar or a bar so far today. So for me, I think we're probably going to be pretty sideways here. You can see 7 closed around its midpoint, above its midpoint, but relatively around its midpoint. It is a pretty large reversal up on bar 7, so you have to be thinking we might go a little bit higher. You also have to keep in mind that we might get 2 hours of sideways up trading today. So how eager are you to short at this point? Probably not all that eager. 8, you can see there were sellers above 7 during 8, so big tail on the top of 8 and a tail on the bottom of 8 as well. Bulls are hoping it's a micro double bottom, 7 and 8. However, 8 traded above bar 7, and we ended up finding sellers up here. Not all that surprising. We'll probably get back to the bar 7 close. Any bear who sold the close of 7, taking a chance that we were going to get a collapse, will be disappointed with 8, but those traders scale in higher, knowing it's going to get back to their price. The other problem with 8 is it's a wedge. Bar 1 is the first push pullback. Bar 3 through 6 is the second push pullback 7, and then bar 8 is the third push up. So it's a wedge, 1, pullback 2, pullback 3. And we have a wedge top, 1, 3, 1, 3, 8. So if 9 is a big bear bar closing near its low, that could be a potential swing down. I think the issue with that is that even if 9 is a big bear bar closing near its low, most traders do not want to sell yet. I think that we need to go sideways up a little bit more before traders are looking to short. Now let's talk about bar 9. Bar 9, you can see it traded above 8. We initially found sellers above. It is a wedge for the bears, so that's good. However, big tail on the bottom and the top of bar 9. So how much do you really want to sell here? For me, I'm looking at this and I see these huge tails. Now I'm not really all that interested. Even if the bar was perfect and 9 closed on its low, it would be a credible swing sell for sure. But you also have to keep in mind that the context of the day is just a little bit more due for a bounce. Not saying we're going to get a small pullback bull trend day today. However, the first couple hours, we're most likely going to get some sort of rally. So it's hard to want to sell this early in the day when we've only gotten 2 bear, or 9 would be the third bear close. So we have 6 bull closes and 3 bear closes. And I think the bulls are more dominant today. Even going back to yesterday, 3 of the final 5 bars were bull closes. So if you look at the past 15 bars, vast majority of them, 8, 9, are bull closes. So not really a great sell below 9, probably buyers below scaling it lower. However, you have to keep in mind it is a wedge. And since it is a wedge, the bears might get a second leg sideways to down. Disappointing follow through on 10. If you sold below 9, you're now at a loss on the close of bar 10. So is 10 technically follow through for the bears? Yes, technically 10 is a follow through bar since it is not a bull bar. However, selling below 9 was not a very good trade. If you sold below 9, you basically got a doji bar on 10 as follow through. So that's not very good either. So would I want to sell anywhere in here? No, I'm really not all that interested in it. I think we're going to end up being a lot more sideways to up. However, 9, 10, still probably a first leg down. So the first reversal up, we might need to get a second leg sideways to down. 11, you can see we're forming a triangle. And we're around the apex of the triangle. The daily range at this point, so factors, things to consider. The daily range at this point, 28.5. The past, prior day is 120, it was like 114 points, something along those lines. So do you think that after we got an 114 point day that we're going to get a range day that's 30? No, it's probably going to be at least half of that. So it's probably going to be 50. And even honestly 50, I thought it was a little bit smaller than it should have been. I thought a lot of these days, you'll usually get a 60 to 75 range day after that big bear day. So even what we got, I did not think it was all that great for the bears, or I did not think it was all that much of a big range. I was surprised by how small the range ended up being today. I thought it would be a little bit bigger. But anyways, 11, an inside bar. However, it does not close on its high. Is it a credible swing buy? You can probably take it for a swing, but why isn't it closing on its high? And additionally, 9, 10 is probably due for some sort of second leg down. I don't know what the second leg down is going to look like. However, they're probably going to get a second leg sideways to down. And 12, believe it or not, is the bear's second leg sideways to down. You can see the tail of bar 12 trades down to around the bar 10 close during bar 12, and then the bears buy back their shorts, and that's what ends up causing the rally. The bears buying back shorts in here. 12 consecutive bull bars, 12 closing on its high, and we're always in long. So is it reasonable to buy above 12 and take a chance that we end up getting a swing up? Yeah, I think that's an okay thing to do. It's a good swing trade, and it's the opening range, taking a chance that the range doubles. Maybe trying to make these bulls were not able to make 20 points. So any bull who bought came up 1 point short of making 20 points. 13 consecutive bull bars, 12, 13. Good for the bulls. We're probably going at least a little bit higher. This is good follow through on 13. However, this is a lot of trading range price action. It makes me think today might be a little bit more of a trading range day than any sort of trend day. So am I that eager to be buying here with tight stops? No, I think that if you're buying up here, you're going to sit through pullbacks. We're still always in long, and we're probably going higher. However, again, you have to be thinking we're probably going to get some sort of pullback in this area, so it's probably just better to wait. 14, a doji bar. So 12, 13, good for the bulls, and then doji bar, disappointment on 14. However, it doesn't mean we're going to go down. It just means sideways might start soon. 14 is a sign. Whenever you're in a buy the close bull trend, so 11, 12, 13 is a buy the close bull trend. And whenever you're in a buy the close bull trend, there's an increased chance, and you get a doji bar, it greatly increases the chances that the buy the close is going to come to an end rather soon. So 15, another bull bar closing near its high, basically a replica of bar 13. It's good for the bulls that we're getting consistent bar sizes. I think that 13 and 15 are good, consistent sizing for bars. However, you can't really like the fact that we got a doji bar on 14. So it might be we're going to pull back before we start getting anywhere, that much higher. Again, I don't know how much higher we're going. I thought measured move up at the opening range was a reasonable target. Basically, in a trading range open, betting on the daily range to double, let's say we get a breakup to the upside. So go back to bar 12, right? If you can only see bar 12, betting on the daily range to double to the upside is a reasonable thing to do. If you got a bear bar closing near its low and the context was bearish, betting on the daily range to double to the downside is also a reasonable thing to do. You can use bodies if you're using a more conservative estimate, or if you're in a more, if the context calls for you to be a bit more aggressive, you're a bit more bullish, you could use the tails as well and go for a larger measured move. However, I did not think that this context called for an aggressive measured move. Therefore, I thought that a measured move of just the bodies was a reasonable profit target. So 15, a bull bar, but after the doji 14, you have to be wondering where we're going to go. However, probably buyers below 15 scaling in lower. you can see on 16, we traded below 15 in bull spot. You know we're going to get a second leg sideways to up, but the question is, how far up are we going after that? We just had a doji bar, and now we have a bear bar. So it might be a little bit disappointing here. 17, an inside bar for the bulls. It's an IOI pattern. So an inside bar, 15 is inside of 16, and then that's which is what makes 16 an outside bar. And then 17 is an inside bar of 16, which is a breakout mode pattern, 15, 16, 17. However, breakout mode patterns are often final flags as well. I think in this context, this is probably some sort of final flag. It's notable that 12, 13, 15, and 16 have closed on their highs. However, this is not a strong small pullback bull trend. There's too much selling. I think 7 is a big problem for the bulls. Doesn't mean we're going straight down, but this means it might look more like a leg in a trading range than any sort of bull trend. So an inside bar, buyers around the moving average 16, high 1 for the bulls on 17. Consecutive bull bars 18, so 17, 18 consecutive bull bars closing near their highs. We're probably going at least a little bit higher. However, this could be climactic. 1, pullback, 2, pullback, 3, or probably better, 1, pullback, 2, pullback, 3. Still, we might go at least a little bit higher. 17, 18 consecutive bull bars closing near their highs. We have now formed the 18 bar range. So 19 is a breakout above the 18 bar range, 3 straight bull bars. Good for the bulls, probably going at least a little bit higher, but definitely climactic. And you can look, we got 3 straight bull bars closing above their midpoints, deep pullback. 3 straight bull bars closing above their midpoints, and then a pullback. Obviously, it went a little bit higher, and we might go a little higher here. However, again, 3 straight bull bars closing above their midpoints. What might happen? And then all the bulls exit, and that causes 20. Why do the bulls exit? Because it's probably still a trading range day, and a lot of traders are going to be quick to take profits on a trading range day, and they exit up in this area, and that's what causes bar 20, a big bear bar closing near its low. Can you sell below 20? Yeah, I think it's a wedge. 1, 2, 3, or 1, 2, 3, 1, 2, 3, something like that. But somewhere in here, you can draw a wedge. There's a lot of different ways to draw it. I think for me personally, I would think of this as a spike, and then 7 as the pullback, and then a wedge channel, 8, 15, 19. So that's how I would think of it. 20 is a big bear surprise, reversing the market to always in short. So I think it's credible to take the short below 20. The bulls who bought below 19 are obviously disappointed. So a question you can ask yourself is, are we going to get back to the 19 low and trap in the bulls? Sorry. Are we going to get back to the 19 low? Because if we don't, the bulls who bought below and are scaling in lower might be trapped. So you have to keep that in mind. 20, big bear bar closing near its low, always in short, reasonable to sell, possible high of the day, failed breakout above the 18 bar range. So maybe we get a breakout below the 18 bar range, which we ended up doing. Something else to look at is we have a trend line break, and then possibly we might try and form some sort of higher low major trend reversal, lower low major trend reversal. However, the thing to consider is that this is in a 100 bar pattern at this point, from bars 1 to bar 20 today. So we might get at least a couple legs sideways down, and it might take 40, 50 bars for this pattern to manifest. And even then, it's probably going to take a while before it goes anywhere productive. Sometimes when you're taking major trend reversals, you have to just sit in the trade for a while and wait through a lot of noise before you get the move that you want, and that's okay. So 21, a bit of a disappointment for the bears because 20 traded back up to the bar 19 low. And big tail, 21 high, 21 low. But it is follow through for the bears. So a lot of the bears, they wanted to sell below 20, but they were too worried it was a trap. They see 21. Some of them use any sort of bounce on 22 to sell around the bar 20 low now that they have more information. However, again, disappointing that the bar 19 low ended up getting touched on bar 21, allowing limit order bulls to make money. That is a problem. That tells me even if we do go down, which it seems like we're going to, we're always in short, it might end up becoming a leg in a trading range. So 22, a reversal up for the bulls, but it's a bad high 1. There's sellers above. After this, 20 and 21, you have to be expecting a lower high. 23, sorry, I dropped it. Give me a second to get a sip of water. All right. Everything should be good. All right. 23, a bear bar, but a big tail on the bottom. So we're probably still going lower, and we have a bear micro channel, 20, 21, 22, 23. So I would imagine we're going lower. However, we might pull back first. And then 24, a big bear bar closing near its low. The bulls might argue second leg trap. So first leg down 20, 21, pull back 22, and then second leg trap 23, 24. But, do we think this is a second leg trap? Or considering we didn't even trade above this bar, is it more likely that this is some sort of strong first leg in a trading range for the bears? Maybe this is the first, you could have argued on the close of 24, maybe this is the first leg and we get a pullback and then a second leg down. Obviously, we ended up getting a little more for the first leg and then a pullback and then a second leg down. However, do you sell below 24? I think you can, but you have to understand the premise of your trade. There's two options if you sell below 24. It seems that the daily range is a bit smaller so far today. So a lot of bears, if they sold, you're also selling in the middle of a trading range. Not all that ideal. But a lot of bears, if they sold below, they got 5 points, a little more, and they scalped, causing 25. Some bears were hoping 25 looked like 24, and when it wasn't, they ended up exiting. So 25, I think, is a disappointment bar for the bears. We might have a first leg down 20, 21, and then a pullback 22, a second leg down 23, 24, and a pullback 25. An inside bar, a low one short 26, closing near its low. However, a tail on the top and a tail on the bottom. So do I really want to be selling below 26? Probably not. It's maybe not wrong because we are always in short and it's a bear bar closing near its low, but it might be a third leg down in a trading range. So I'd probably rather not. And if you did sell below 26, 27 is disappointment. So I think that traders are disappointed. It's true that 20 through 27 is a strong enough leg down that you're expecting a lower high, and it's a micro channel 20 through 27, right? So an 8 bar bear micro channel. So even if we do bounce a little bit, there's going to be sellers above. So 2 doji bars in the past 3 bars, 25, 27, and sellers above 27 during 28. However, it's really not that good to be doing anything other than selling above 27 right now. You could sell above, be willing to scale in higher. That's a reasonable thing to do. And then 29, another bull bar. However, what do you notice on a smaller time frame? We've talked about smaller time frames, and what are these? They're pullbacks. So what is this? This tail on 28. It's a pullback. So 28 rallied above 27 and then pulled back. And then 29 rallied again. So what is this? It's a two-legged correction. And this is a bear trend, and this is a two-legged correction in a bear trend. So you have to be thinking about that, the possibility that it's a two-legged correction in a bear trend. Does that mean that we're going to sell off a whole bunch after this? No, it just means this reversal up that we're getting is probably somewhat minor. So you do have to keep that in mind. Bar 30, buyers below 29 during 30. Not all that surprising. Bulls, what do they want? Well, they're hoping that this is 3 legs down. First leg to bar 21, or to the pullback on 22, second leg down to 27, and then we're getting some sort of third leg down here. And the whole thing's going to turn into a wedge, and they're going to get a second leg up. And that might be the case. However, even if it is, the reality is the rally up to this area was pretty strong. Or sorry, the sell-off down to this area was pretty strong. So you have to be expecting a lower high, and even if you get a reversal, maybe a 50% pullback. Another thing to mention is that the bulls who bought above 19, after 3 straight bull bars, it's reasonable to buy. It's not like ideal, but it's theoretically reasonable to buy. So the bulls who bought above 19, well, if they had a really wide stop and they're willing to scale in, 80% chance they can avoid a loss. So what are the odds? Where does it have to go for them to avoid a loss? Well, in order for them to avoid a loss, in order for them to make a profit, it would have to get back up to here. 60% chance of that in general. In order for them to avoid a loss, which is an 80% chance, it has to go to the midpoint of their 2 buys. The buy above 32, is a bull bar closing near its high, the next reasonable one. If you look, that's where we went. So one of the problems with buying above 37 is that you were buying the exact midpoint of where these traders who were trying to avoid a loss were taking profits. So 31, a bear bar closing near its low, but same problem as 27, 28, 30, pullback 31, looks like a second leg trap. So now if you're selling below 31, you're selling a possible second leg trap. Whereas if you're buying above 27, or if you're buying 20, 28, 29, which is worse than selling 31, but still none of it's good, you're selling a third leg down in, some sort of nested second leg trap. So it's really not all that great to be selling 31. Reversal up 32 is a wedge. So it's a reasonable buy above 32, but for me, I think it's a minor reversal. I'm probably just going to look and wait and see if we get a bounce and then look to sell it. Now, what do the bulls want? Well, they're hoping that we had this huge trend line break here and that we're now getting a higher low major trend reversal. So some of the bulls buy, they put a stop below 1, taking a chance this is the start of the higher low major trend reversal, and they're hoping that we start to get a good rally. They know this channel down is pretty tight, so we might go a little more sideways before we go up. However, again, they're just taking a chance that this is the start of the rally. 33, a big bear bar closing near its low. Good for the bears. We might end up going a little bit lower. The bears want a breakout below the wedge. However, after a wedge, you have to keep in mind we should get 2 legs sideways top. So the traders who bought above 32 also did a reasonable thing. So we might have to get back to that high. 32 might be the first leg up. So you have to be thinking about a second leg up rather than a collapse below bar 33. 34, a bull bar, but a big tail on the top. Sellers above 33, probably only for a scalp though. Again, we're going to get a second leg up from 32, and this could be the start of it. 35, consecutive bull bars, good for the bulls. They're hoping that we go at least a little bit higher, but I'm not sure how much higher we're really going to go. Maybe the top of the channel, the bar 23 high, but again, probably just better to wait, I think. 36, doji bar, disappointing. So it's possible that we have one or first leg up, right? We have a wedge down, first leg up 32, pull back 33, second leg up 34, 35, pull back 36. Now we have a climactic bar 37, a breakout, a bull bar closing reasonably near its high. However, the thing about buying 37, so can you buy 37? You could, but there's a lot of danger to this. If you're buying, the thing you're betting on is that this is the higher low major trend reversal right here, and that we're going to get a big swing up. And you're hoping that this is basically the start of it. But the problem is that it's a third leg up. 1, 2, 3. We have the obvious problem of this. And we have the problem that it's around a 50% pullback when you're expecting a lower high. So if you do buy above 37, you basically need the market to race straight up. You could exit during 38, or at the latest, you exit below 38 if you did buy above 37. There's 3 pushes up, 1, 2, 3. It's a wedge and a small bear bar closing near its low. It's a lower high. So bears maybe argue bull trend, trend line break, lower high, major trend reversal. So both sides looking for a major trend reversal right now. But it's a small bar. It might be, and it's a little bit higher in the trading range. So 38 makes sense. 39, a big bear bar closing near its low. Probably buyers not too far below. However, 38, 39, strong enough for a second leg down. So you can sell the close of 39, expecting a second leg. 40, a reversal up. The bulls are hoping it's some sort of swing up, and 38, 39 is a bull trap. However, 40 is not that convincing, and I think we're going to get a pullback around the 50% mark. 41, consecutive bull bars, but tails 40, 41. It's a minor reversal, still expecting a lower high. 42 is an inside bar, so a low one short for the bears. However, I don't really want to sell below a doji bar. Probably buyers below, scaling in lower. 43, another bear bar, but big tail on the bottom. Could be a second leg trap. 38, 39, pullback 40 through 42, and then 43, second leg trap. 44, an inside bar, so the bulls argue it's a high 2, but no one wants to buy above a bull bar with the big tail around the moving average. I don't think I marked 45, but you could have sold 45. It's a low 2 short for the bears. However, it's an outside down bar, and it makes 44 your signal bar, which is not as good as it could be. I would have preferred if 45 was the signal bar. 46, more follow through for the bears, but a doji bar, right? So this is moving down. We're channeling down, but it's really not all that great. I think if you're short, you just put your stop above 41 and you let yourself get stopped out, or you wait for another lower high to be formed and then you put your stop at that point. But if you're trying to micromanage this trade, it's not going to go well because it's a tight trading range. So it's a bit difficult to do that. 47, we got sellers above 46 and a bear bar, so big tail on the top, but a tail on the bottom, maybe a little bit disappointing. 48, another bear bar, but there might be some buyers in this area below this reasonable buy. However, you know that we just got a lower high, we might end up forming a lower low, so it's risky to buy down here. 48, another bear bar, but a tail on the bottom. So really, again, we're moving down and it's a reasonably tight channel. It could be forming some sort of leg 1, pullback leg 2 like we did, but it's a bit difficult to be short in an encouraging fashion right now. 49, a doji bar, so probably sellers above, and then an outside bar 50. Disappointing, I think, for the bulls. They were hoping a bull bar closing near its high. The bull, we can go down like this with dojis all day, but really what's going on is the bulls are trying to get a give up bar they're trying to get the bears to exit and get a big bull bar closing near its high. And the bears are trying to get the bulls to exit and get a big bear bar closing near its low. 51, an outside bar, so it's an OO pattern, possible final flag. The bears can get a breakout below 51. We might race down to the low of the day. Instead, we triggered above 51. It's a theoretical buy above 51 because it's an OO pattern, but no one's going to buy above a bear bar 51. So 52, we found sellers above 51, relatively disappointing. And then buyers below 52, sellers at the moving average during 52, and buyers below 52. But no one wants to, it's really tough to want to buy. We're always in short. So if you're taking limit order trades, you're probably more looking to sell above things right now. 54, another bear bar, but another doji bar. Again, so many doji bars. 4 of the past 6 bars have been doji bars, so it's a bit difficult to be doing anything unless you're holding always in. 55, a bear bar, but a tail on the bottom. The bears need a big breakout. Instead, we get disappointment, I think, on 56. So I think 56 is a bit of a give up from the bears. They were hoping to get a big bear bar closing near its low. Instead, we got this, so they might give up for a few legs sideways to up. 57, consecutive bull bars. It's a nested second leg move. So up on 56, down on 56, up 57. However, no one really wants to buy up here. I think it's better to wait. And it's hard to look to sell. If you're selling 58, you probably need to have a pretty wide stop. So some bears might sell below 58, but I'd rather wait for a deeper correction. 59, a bull bar closing near its high. It's a possible double bottom and maybe a big wedge like 12, 32, 56, but I'd rather wait. I want another bull bar closing near its high, and you don't get it on 60. There ends up being sellers above 58. An outside down bar 61, bear bar closing near its low. It's a possible wedge 54, 58, 61. It's a double top, so it's a wedge double top with 52, but it's a really big bar, really big risk, and this is a tight trading range. You can sell it for a swing for sure, always in short. However, we're getting late in the day, so it might, while it's reasonable to do, I was just kind of a little more stuck on the sidelines at this point in the day. 62 consecutive bear bars closing near their lows. We're always in short. The bears are hoping for a collapse below the low of the day. However, you have to keep in mind, with all the trading range price action on the day, even if we get below the low of the day, there's probably going to be buyers down there. And those buyers who buy below and scale in are going to make money, even if we're always in short. 63, a low one short, but a doji bar, meaning the sell the close is probably coming to an end pretty soon. I think this is disappointing for the bears. If I'm short for any reason, I did not want to see a doji bar here. I wanted to see another big bear bar. To me, this is a pullback after consecutive bear bars. And usually, it's okay to get a pullback, but you want to see 3 straight bear bars before you get a pullback, not 2. 64, an outside bar, but a tail on the top and a tail on the bottom. Not as good as it could be. Buyers below 64 during 65. Do you buy above 65? No, I mean, it's some sort of wedge, but trends form wedges all the time. They're meaningless. 66, outside down. Can you sell below 66? Again, maybe, but you're playing a dangerous game. I think 49 through 60 was a tight trading range, and we had an OO pattern in there, which looks like a final flag to me. If you're selling 66, you're selling the low of the day, and there's probably buyers around the low of the day. Probably entering. Yeah, so you're going to stop basically at the exact low of the day, and this is probably a final flag, and it's a trading range day. So I'm not doing that. We're probably going to oscillate around the open, if anything. So if you're selling down here, we're probably going to end up closing here today. So you're playing a very dangerous game. And, Bears got lucky, and I think they were able to make 5 points. So I think they came up 1 tick short, actually. Nope, they did not. So the Bears were able to make exactly 5 points, and that's pretty good for the Bears there. So 67, another bear bar, but tail. 68, a tail. And you can see the Bears scalp with 5 points, 69. Those who didn't scalp, they were hoping that 70 was going to be a big bear bar closing near its low. When they didn't get it, they gave up 71. You buy above 71, you probably can. We're probably back to always in long, but probably better to just look to buy a 50% pullback, 71, 72. Bulls buy after 4 straight bull bars. They buy a 50% pullback, 73, and just look for a scalp. 74, II, 73, 74. Sorry, 73 is not an inside bar. So good to buy around the 50% pullback or below 72 during 73. I think that's a high probability trade, but late in the day, tough to want to scale in. So a bit of a difficult trade. Bull bar 74, inside bar, and then we went sideways and got back to around the open of the day. For stop orders, 1 was fine, 12, 13, maybe 17 or 18, but you're getting high in the range. 20 is fine, maybe 24. And then 32 made some sense, but tight channel down, so tough to do. Probably going to get a deep pullback like you did 33. And then 38 made sense, 39, 45, and 61, but a little difficult. For limit orders, I thought the easiest limit orders on the trade or on the day, probably buying below 72 or the 50% pullback. I thought that was pretty easy if you're that type of trader. Maybe selling above 46, but probably not as great. Probably selling above 27 is much better. And yeah. So on the daily chart, we have a bear doji bar. So it's follow through for the bears, but is this the follow through you wanted to see on this big bear surprise? I'm going to turn on the 60-minute or the extended hours chart, try to get into that habit. So it's follow through, but I don't know. Sometimes, yeah, bear bar, pause bar, and you get another big bear bar, but to me, that's a bit disappointing. So be interesting to see if bears decide to buy back shorts tomorrow morning. Granted, it's a bear surprise, so it's going to get a second leg and probably a lower high, but still. However, consecutive bear bars closing below the moving average is good for the bears. The weekly chart, you can see we're getting a bear bar. However, after these 3 straight bull weeks, there's probably buyers somewhere below here. Again, this is all just going to form a big trading range. I think that's the big takeaway. Is that I think we might have to get down to 5,000. That might be the low. So maybe it's going to be leg 1, pullback, and then leg 2 down to 5,000. I'll be interested to see. Stock market's dropping a hint. So not quite. Wanted to see if the leg 2 was around 5,000. So it's not quite, but it's in the ballpark. It's still below this and above 5,000. So it's somewhere in here, which is close enough for me to think that maybe a second leg might be complex and not go straight there, but might end up somewhere in this area. So that's something I think to pay attention to. The bulls are hoping it's a new leg in the small pullback bull trend, but I doubt it. This was strong enough to make me think we're going sideways. So all right, that's going.